All right, Chapter 14, Business Finance. A little later today, I'll try to go over a little bit more Project 2. This is a lot of stuff to go over here, but I don't know how much of it affects your quiz. I'm going to really try to whip through this and just try to hit on high points, okay, because we don't have homework and stuff, okay. Not for this chapter. We do get the quiz, okay. Talk about some of the things in the chapter outline. Of course, you guys can take a look at that. This is huge right now. You know, interest rates, those types of things. Some of these might affect your guys' project. Project 2. I was just listening to the news this morning. They were talking about J&J came out with their quarterly earnings, but they're also making projections. They're projecting that their revenues and their profit probably going to be down because of the currency exchange issues. Okay, because the dollar right now is very strong as compared to other currencies around the world, specifically in this case, I think, or importantly in this case, the euro, right? Okay. Economic growth is a huge issue, right? We've had the slowest economic growth for our last since 2007, anyhow, since the start of the recession, 2008, I guess it was. Until today is probably the slowest similar period of growth that we've had since the Depression, and probably actually including the Depression. So we got different stuff going on. So, of course, my computer freezes up. There we go. Did this earlier, and I couldn't make it go, and so we'll see. Hopefully this will kind of keep moving along, but then again, maybe not. Money markets, short term, right? This is funding a lot of corporations, and the government uses short term paper. They sell it, right, or issue it, and we lend them money. Okay, capital markets are more the long term. Remember, I always talk a lot about debt and equity, right? Debt's bonds, right? Companies issue bonds, common stock, preferred stock, and some of these convertible securities are generally considered types of equity. These are kind of hybrid types of equities, right? But those make up a company's capital structure, right? You can finance a company with debt or equity. Capital structure is the financing of it. We talk a lot about globalization, and again, this is huge, and I think for some of your companies this is going to be really important. For others, not so much so. But those that are especially engaged in exporting and whatnot, or that have significant presence overseas, or maybe those that have manufacturing and stuff overseas, could be a big deal, right? And like I said, with J&J, this is pretty huge. Again, we're just talking about how globalization's changed a lot. We've had NAFTA. I think the one that's in the works right now is the TPP, Trans-Pacific Partnership, or something like that they're talking about. I'm a huge believer in free trade, and I think most of our Congress and whatnot is, so they're working on some of those things, even opening up our markets to Cuba, which are kind of interesting. So on the other hand, people, I'm showing you the cartoons from the other side, that don't believe so much in free trade. I was back. Ross Perot ran for president back in the 90s, before most of you guys were born, and he was very anti-free trade, very conservative but anti-free trade kind of guy. Thought that we should close our deals because it would cost jobs and on and on. And I'm more a believer in Milton Friedman than I am Ross Perot. And Milton Friedman believes in free trade, even if it's unilateral free trade. And I think Milton's right. New York Stock Exchange, NASDAQ. You need to know which exchange your company that you're doing for Project 2 trades on, right? Huge dollars amounts. And look at the two U.S. exchanges compared to the next biggest. It's unbelievable how big, really, our capital markets are here in the U.S. International capital markets, companies are international nowadays, and so companies might well go to other countries where interest rates might be cheaper, right, to raise money. So Switzerland's issuing government bonds for negative interest rates. People are paying the government of Switzerland to lend the government of Switzerland money. It seems insane. Okay, a company like Apple or whatever could borrow money probably for very, very small positive interest rates, maybe in Switzerland. Of course, you'd have the Swiss franc, they're not on the euro, and then you'd have all the exchange things and whatnot that would happen with that. And so, gets to be some really complicated financial things there. You'd probably have to specialize in if you were going to really talk about. And so you guys probably won't get that in depth when you're looking at your own projects. But the effect of the exchange rate on sales and profits could be a big thing. Securities available in the capital market, certainly the federal government, other government agencies, as opposed to the federal government directly. And that's one thing. We look at the federal government debt and we say, oh, geez, it's $17 trillion, which is a heck of a lot. But government agencies issue a lot of debt as well. Fannie Mae, Freddie Mac, Sallie Mae, those types of things are GSEs, government service agencies, I think, or government service. Shoot, I can't remember what GSE stands for. I'm sorry. Investors have to choose between corporate and non-corporate securities. Generally, you would think you would get a little premium if you're investing with corporates because they're a little more risky than the government, right? At least our government. The Greek government right now, I'd much rather invest money with Microsoft or Apple, in bonds than I would investing any money in Greece. There's a pretty good chance they're going to go upside down. U.S. government securities, Treasury, right? They manage it. The big issue with the government right now is we've had unbelievably low interest rates for the last 4, 5, 6 years. That's a huge factor, a huge benefit actually for our government. Even with those low interest rates, we're paying $400 billion a year in interest. Our government is. But imagine if rates double, right? If what our government's paying, if it doubles, all of a sudden they're going to be paying $800 billion a year, and what that's going to do, to our ability to provide government services. So, federally sponsored, federal home loan banks, that also sell. These are some of the GSEs: Fannie Mae, Farm Credit Bank, student loan. That's Sallie Mae, right? State and local securities. So a lot of states, those offer those. A lot of those have real tax advantages, right? Investors that have high marginal tax brackets like to oftentimes purchase municipal securities because they can get income from those without paying any tax, oftentimes on them. Corporate securities, fixed life and repaid at maturity, although some of them have call options, right? Bonds come due or paid off. The corporation normally replaces the debt with new bonds. Normally, yeah. Preferred stock is not used all that often. You might check though with your company. They might have some preferred stock outstanding. It's kind of interesting. It's a hybrid that usually has lots of disadvantages for the corporation and some reasonable advantages for the investor. But in some ways that makes it kind of attractive because you might be able to pay lower rates as a corporation, and an investor might be willing to accept lower rates because of some of the advantages to the investor. Common stock, right? This is what you guys are analyzing as much as anything, right? The common stock, or the ownership of companies, right? You and I can buy stock in all the companies that you guys have chosen. We can buy stock in thousands of other companies, right? We can be part owners of those companies if we choose, right? Treasury stocks, when a company purchases its own stock. Look at these for Project 2. I really want you to pay attention. There's some of the companies that you guys have chosen that are aggressively buy back their stock. Okay, some of them, their treasury stock has increased. There was one of them I noticed that their treasury stocks has increased dramatically, and I think it's because of the stock options and whatnot that they issue to their executives. Okay, so kind of the opposite thing, and that tends to dilute the stock ownership. Okay. Internal versus external. Internal is profitability, right? Minus dividends paid. So you get resultant retained earnings. Depreciation is a bit of a tax shield, we say, and it allows companies to maybe accumulate cash. So you might get, in fact, that's a big deal for a lot of companies, is free cash flow versus actual earnings. So that's just where the money comes from, the supply of capital funds. really the household sector is a major supplier of funds, right? It's what we save, and oftentimes we have these indirect investments. Probably the biggest indirect investments that we do are our 401ks and those types of things, right? Retirement plans that we might have through our business. So, here at the college, there's a total of 11% of my salary that goes into 403b. It's actually just like 401k, and that accumulates and it gets added into the capital formation for the U.S. and businesses or take advantage of that. Okay, they use that money then to grow and prosper, hopefully do all those things, right? It seems really complex, and yet it's relatively efficient. It's amazing how it works. So, flow of funds through the economy. I doubt that a lot of this will be on your assignment. More money comes from insurance companies, right? They end up with a lot of money with float, they call it, right? Because you and I, we might pay life insurance premiums, and yet we hope that we don't have to make use of that for 40 or 50 years. Okay, but those premiums are sitting, and the insurance company has them. Well, they don't just leave them sit, right? They invest those, okay? And other places where it comes from, obviously. Okay, capital markets are divided in many subsets, right? Secondary market is trading securities in appropriate markets, not the original offering, and that's mainly what we look at, right? Other than a company that's had an IPO, and a couple of the new ones that you guys have on there is like GoPro. Just went public here a few years ago, or in the last year or two, I think. Okay, that's an example of a primary market. But secondary market is then, now that it's already gone public and it's available, we can buy and sell and trade. That's basically one of us selling and another person buying, right? And we create that secondary market. Okay, provides a lot of liquidity to investors. Liquidity is a big thing with the companies that we're looking at. Okay, they're private or closely held corporations that do very, very well. The bank I used to work at, the stock, there's stock available, and people can kind of buy that, but it's a limited number of shares that are outstanding. And it's kind of difficult to get in and buy some because it's only available if somebody chooses to sell some. But it's also very illiquid. If I had stock, or if I wanted to sell the stock I do have, I should say, somebody would have to be willing to buy it at that time. Whereas, if I wanted to sell my shares of Microsoft, I can do that literally in seconds. Literally, I've called my broker and decided to buy or sell stock, and while we're still on the phone, he punches in the order. I can hear him clicking his computer, and he can tell me if it's transacted sometimes as quickly as we're on the phone. It kind of depends on what kind of market order I might place, right? And that's allowing the investor to sell them with relative ease and speed, right? Corporation and government use. This is exactly right. Unless we had these markets that work, and while we like to yell and scream and say they're fixed and all that other stuff, hugely, hugely important for raising capital that our companies and our government works, right? Lots of technology, changing lots and lots of things. I'm not going to spend a lot of time on those. I think we all know that traditional exchanges, it wasn't that long ago, and Rod, our accounting teacher, he used to be on the floor of I think it was either the Chicago Board of Trade. I think he was the CME, which is the Chicago Mercantile Exchange, and they still used the old hand signals and those types of things to actually buy, sell, and trade. In those cases, it might have been commodities or the bond pits, okay, and they did that for stocks too, okay, until fairly recently. By recently I mean the last 10, 15 years, where things have gone pretty much, they've gotten pretty much electronic. And New York Stock Exchange is the largest of all traditional exchanges. The NASDAQ's close. I thought we saw that earlier slide, and it looked like the NASDAQ had maybe even passed it. The New York Stock Exchange is also combined with Euronext, I believe. In fact, I think Euronext actually owns it. So our major stock exchange is actually owned by a foreign company. How's that? So regional exchanges trade securities to local firms. Some of those companies may be listed on national exchanges, but they also continue to be traded on regional exchanges. So these might be really smaller companies that want some liquidity, probably not as liquid as the big markets. I don't know a lot of companies that trade on a regional basis, okay, or at regionals, exchanges. Okay. Other than, I suppose, major companies could still trade on regional exchanges, just not through the NASDAQ and whatnot, but they'd have to be set up, all the transferring and that kind of stuff. Yeah, that'd be interesting. I might have to look into that a little bit more. Trading some companies common between, yeah, dual trading, so they probably set it up where maybe the Chicago Stock Exchange exists and basically just passes those trades on through the New York Stock Exchange, right? Yeah. That's not something I know a ton about. I don't think there's any questions in your quiz about it. I'll have to ask my stockbroker buddy. To be listed, yep, companies have to meet certain minimum requirements to be listed, to have that advantage. Okay, and companies want to do that because they want to go public often. A lot of them do because that's how they raise money. Sometimes the raising of the money is just is to supply cash to the founders. When Sergey and Larry started Google, they operated on a shoestring for years, right? Even though the company Google was growing like crazy. Okay, the two of them personally probably didn't have a penny between them, right? It wasn't until they went public maybe then that they realized the billions of dollars of value that the company had, and while they maintained a lot of their stock, right, a lot of the stock was sold off too, and thus they were enriched personally, and then of course the stock that they still retain, has continued to go up in value, and so they become richer in that respect as well. Electronic, yeah, just amazing how that's how we've gone, and again, that's why I can call my stockbroker here in Havre, Montana, and they can he can trade me a stock in seconds, that actually trades then and in New York or wherever the case may be. It's just fascinating how quickly that can happen. In 2006, yeah, the New York Stock Exchange merged with electronics so that they could, that's kind of how they got into the electronic part of it, right? They merged with Euronext, it's the largest European exchange. I think Euronext is actually the owner then, if I'm not. Ooh, the New York Stock Exchange was acquired by ICE, Intercontinental Exchange. They shortened that to ICE. I don't know that you need to know a lot about that. NASDAQ was considered over-the-counter market prior to 2006. It's now kind of mainstream, and it was kind of considered the lower. The requirements were less, right, to get into the NASDAQ, and yet a lot of the technology companies way back in the 80s and 90s still wanted to access the markets, and the New York Stock Exchange basically said, no, you didn't qualify to become a part of the New York Stock Exchange, and so many of them listed on the NASDAQ, which was kind of an up-and-comer. But what happened was a lot of those companies became huge, and thus the NASDAQ gained prominence, if you want to call it that, probably an equal footing with the New York Stock Exchange. The requirements might still be less, that I'm not sure of, but some of those early companies were, one of the earliest was Microsoft and Cisco. They were some of the early ones that became just huge companies, right? That were NASDAQ. I think Oracle maybe as well. All right, again, I'm just going through some of the things that are really important, or what I think might be important. So, world exchanges, foreign exchanges, right? Becoming a big deal. Many foreign companies trade on the New York Stock Exchange. Their ADRs are called, or American Depository Receipts. So you and I could buy stock in them. They're required to have a decent amount of disclosure, and maybe up to the same as what American companies are. I'm reluctant. I don't like to have my students do a lot of their project 2 using those companies, because finding other information, news and those types of things is a little bit more difficult. Okay, but you can look up. I mean, DC number 4, technically, in fact, Budweiser, right? Bud, B-U-D, is the ticker symbol, which is owned by InBev. It's a foreign company, and it's trading on the New York Stock Exchange, right? The All-American Beer is a foreign company. Sorry, my computer's freezing up again. I hope it gets me through. I don't have that far to go, but I should have just had notes here so I could continue talking even when my computer freezes up. Well, I'll give it a second or two and have a sip of water. Guess I can pass along a joke. I was at a funeral on Saturday. A golfing acquaintance of mine had passed away, and the priest, he didn't do it. He's obviously not a trained joke teller, and I may not be much better, but I'll see if I can at least improve on his delivery. He was talking about how a priest was out golfing with some buddies, and as the day went along, the priest was hitting some bad shots, and following the bad shots, he would curse and say, "Doggone it, missed again, shoot, crud." And he was, of course, using foul language, maybe, in some cases, and each and every hole, it seemed like he'd make a bad shot. "God dang it," he says, "I missed again, God." And putts especially seemed to be troublesome, and it seemed like every green, he might have a makeable 4, 5, 6, 8 footer or whatever, and he'd miss them, and he'd curse and just exclaim crazily, how he'd missed again, doggone it. And on about the 14th hole, he stepped up over about a 2-foot putt, and he shanked it, and he missed it, and he really launched into a tirade and was swearing and cursing, and doggone it, I missed again. And when about that time, the clouds parted, and or big dark clouds, and they parted, and a clap of thunder came down, and or clap of lightning came down, and you heard the thunder, and the guy next to the priest, his playing buddy, got hit by the bolt of lightning. And about that time, you heard from the heavens, "Doggone it, I missed again." So apparently the priest came by it naturally. So, oh, my computer is completely frozen up, and I don't even know if I can get to a pause or anything here. So, doggone it. Yeah, we'll see. I could curse, like both the priest and the God above, I guess, from that joke right now. It's what I really feel like doing. It's cursing loudly and often. I can't even shut my computer down right now. I won't even do the task manager. I won't do a dang thing. My computer's doing something now. I'm hoping that maybe I can get in and do some futures exchanges have grown. What's futures? Well, a lot of you guys have come from agricultural backgrounds, and so futures are just that. They do it with commodities, grains, those types of things, and you're familiar with that, where a farmer can sell, this year's crop for fall delivery. A lot of them have probably already sold at least a good part of this year's crop, right? But it works for other things too. You can do it for stocks. You can do it for interest rates. You can do all kinds of different things. Okay, they're available in the futures market. Some of those helped lead to the financial crisis that we had. There's no question about it. Credit default swaps and some of those things But for the most part, they're pretty powerful, and they, again, help to make our markets actually more efficient. People get carried away and do speculating and those types of things in these markets, and that creates a bunch of havoc. I used to have customers at the bank, and it's very true. I told them, hedging is a wonderful thing. If you, for example, if you sold your wheat crop now and then you took a hedge so that if the prices went up, you could still take advantage of it. What a wonderful technique, what a wonderful way to market your grain. If you thought the prices were good now, but you were worried they might go up further, sell it and hedge it, and there's nothing wrong with that. So. In general, right? This is, I think, in your, prices, markets are efficient if prices adjust rapidly to new information, and there's continuous market, those types of things, and market can absorb large dollar amounts of securities without destabilizing the prices. And certainly we have almost always a very efficient market, okay? Sometimes too efficient. Sometimes prices adjust rapidly, too rapidly. Here, I'll give you an interesting example. I thought this was kind of cool. I was watching the Masters. A lot of you were, and you saw the Jordan Spieth won, and I don't know if you noticed the clothing and those types of things he was wearing. I sometimes pay attention to that, but one of his main sponsors is Under Armour. Okay, guess what happened to Under Armour stock on Monday? Okay, Under Armour took apparently a little bit of a gamble on Jordan before he had become famous and signed him to a fairly long-term, lucrative contract for Jordan. Okay, and sure enough, he wins the Masters, and the next day, I think Under Armour stock was up fairly significantly, a couple of percent, 2.5 or 3%, which is a pretty big move. Okay, yeah, is that reasonable? I don't know, maybe. That's how Nike became pretty popular, is signing the old Jordan tennis shoes and those types of things, right? Oops. Fixed incomes, those are bonds. Generally speaking, we talk about that. Government bonds, right? U.S. government securities are corporate bonds. Common stocks are not considered a fixed income. So, okay. This talks about the decimalization. They used to sell stocks by ticks. It was by 30 seconds instead of by decimals. Instead of really $1.10, it was $1 and 3/30 seconds or something like that. So weak form is past price information is unrelated to future price. Can't predict anything's right, and semi-strong is prices currently reflect all public information, and so we have a fairly strong, I think, information, both private and public, is immediately reflected in stock prices. We have a fairly strong, system here when we talk about our major companies, right? Because they're regulated and they have to disclose information fairly rapidly. And material changes, they have to disclose almost immediately, and we have access to that almost immediately. And a lot of this, we've become stronger, I think, and our markets have, maybe because of the electronics and whatnot, and the ability to get that information out. The SEC obviously regulates the securities market, stocks, bonds, the whole works, right? Securities exchange, we've talked about those in law class. The primary purpose, right? We want to protect unwary investors, okay? So make markets more competitive. Transparency is the huge thing. It's the availability of information. Sarbanes-Oxley, additional protections, hopefully, although it obviously didn't stop the financial market meltdown in 2007. All offerings are registered with the SEC, right? Different things there. I don't think a lot of that's on your guys' stuff. And again, a lot of this went back to our business law class. So I'm not going to get into that too much. Sarbanes-Oxley, yeah, now one of the big things is it required CEOs and CFOs to sign off. They can no longer claim that that the accountants were screwing them out of things and that they were unaware of what was going on. They're part of it, right? And so they're accountable now for that. So I think I'm done. Yay. I'm going to try to go back, and I don't know if I'll be able to, but actually go and edit out the portion that didn't work so well. So